If you are a loan broker competing for the same general business loan clients as everyone else, there may be a growth opportunity you are overlooking. That opportunity is equipment leasing and equipment financing. This does not mean you should stop offering other types of business financing. It means equipment finance can give you a more specific market, clearer referral opportunities, and another way to help businesses that need funding to grow. In this video, we will look at why loan brokers should consider equipment leasing and equipment financing, how these transactions work, where the opportunities come from, and what you should do before making this part of your business. Let's start with the basic difference between general business lending and equipment finance. With a general business loan, the borrower may be requesting money for many different purposes. They might want working capital, debt consolidation, payroll support, marketing funds, or expansion capital. Those needs are legitimate, but the application can sometimes be more difficult to explain. The lender has to evaluate the business, its cash flow, its credit profile, and how the money will be used. Equipment financing is usually connected to a specific asset. That equipment could be a commercial truck, construction machinery, medical equipment, manufacturing equipment, restaurant equipment, technology, or another business asset. The business owner knows what they need, the vendor knows what is being sold, and the lender can evaluate the transaction around a specific piece of equipment. That makes the conversation more concrete. Instead of asking a business owner, "How much money do you need?" you may be discussing a specific purchase that helps the business produce revenue, complete more jobs, or operate more efficiently. That difference can create a clearer starting point for the broker. The first reason loan brokers should consider equipment finance is that businesses regularly need equipment. Businesses replace old equipment. They add new equipment when they expand. They purchase vehicles, tools, technology, and machinery to serve more customers. This creates recurring demand. A contractor may need another truck. A trucking company may need additional trailers. A medical practice may need new equipment. A restaurant may need kitchen upgrades. A manufacturer may need a machine that increases production. The need is not limited to one type of business. This gives a loan broker the opportunity to choose a customer group and become more familiar with its equipment needs. For example, instead of trying to serve every business in every industry, you could focus on contractors, transportation companies, medical offices, or small manufacturers. You do not have to know everything about every industry. You can begin by learning the common equipment, common financing questions, and common challenges for one customer group. That focus can make your marketing and conversations more specific. The second reason is referral relationships. Equipment finance opportunities often come from people who are already involved in equipment transactions. That includes equipment dealers, truck dealerships, machinery vendors, accountants, business consultants, and other professionals who work with business owners. These referral partners may regularly meet companies that need financing. An equipment dealer may have a customer who wants to purchase equipment but does not have enough cash available. An accountant may know a business owner who is planning an expansion. A vendor may have a sale ready to close, but the customer still needs financing. If you build professional relationships with these partners, you may become the person they think of when a customer needs help financing equipment. The key is to approach these relationships professionally. Do not simply ask someone to send you leads. Start by learning about their business, the customers they serve, and the financing problems they see most often. Then explain clearly how you help. You might say, "When your customers need equipment but are not sure how to structure the financing, I help organize the application and connect them with potential financing sources." That is much stronger than simply saying, "Send me business." The third reason is that equipment finance can help you create a more focused message. General loan broker marketing can sound very similar from one company to another. Many brokers say they help businesses get funding. Many talk about fast approvals, flexible options, or access to lenders. Those messages may be useful, but they can also be difficult to differentiate. A more specific message could be, "I help contractors finance the trucks and equipment they need to grow," or I help small businesses explore financing options for commercial equipment purchases. That message gives the audience a clearer picture of who you help and what problem you solve. Specificity can improve your conversations because the business owner immediately understands whether your service may be relevant to them. Now, equipment leasing and equipment financing are related, but they are not exactly the same. With equipment financing, the business typically borrows money to purchase equipment. The lender reviews the transaction and, if approved, provides financing for the purchase. With equipment leasing, the business uses the equipment under a lease agreement. Depending on the structure, the business may have options at the end of the lease, including returning the equipment, renewing the lease, or purchasing the equipment. The right structure depends on the business, the equipment, the lender, the borrower's qualifications, and the specific terms. As a broker, your role is not to promise approval or decide what is best without reviewing the details. Your role is to understand the customer's needs, gather accurate information, identify potential financing sources, and help move the application through the process. That distinction matters. You are not the lender. You do not control the approval decision. You are helping organize the transaction and connect the customer with appropriate financing possibilities. Another advantage of learning equipment finance is that the transaction can be easier to explain using business outcomes. A business owner may not be excited about discussing financial terms by themselves, but they may be very interested in purchasing a machine that allows them to take on more work. They may want a truck that helps them expand their service area. They may need technology that reduces delays or improves productivity. When the financing is connected to a business asset, the conversation can focus on how that asset supports the company's plans. That does not eliminate risk. It does not guarantee that the business will succeed, but it gives you a clearer business conversation. Now, here is an important warning. Equipment finance is not a shortcut to easy money. You still need to learn the products. You need to understand basic lender requirements. You need to collect accurate information. You need to communicate clearly with customers and referral partners. You also need to understand that every transaction is different. A borrower's credit, time in business, cash flow, industry, equipment type, down payment, and documentation can all affect the available options. Do not make promises you cannot keep. A professional broker sets realistic expectations and explains that financing is subject to lender review and approval. So, how can you begin? First, choose one customer group. Do not start by trying to market to every business owner in the country. Choose a group where you already have experience, relationships, or genuine interest. Second, learn the equipment that group commonly uses. Understand what the equipment does, why businesses purchase it, and what questions customers may ask about financing. Third, build a list of potential referral partners. Reach out to equipment dealers, vendors, accountants, and business professionals who already serve your target customers. Fourth, learn the application process. Understand what information is typically needed, how to organize the documents, and how to communicate with lenders professionally. Finally, create a simple follow-up system. Track your prospects, referral partners, applications, and next steps. Many opportunities are lost because nobody follows up consistently. The opportunity in equipment leasing and equipment financing is not just the financing transaction itself. It is the possibility of building a focused specialty around a recurring business need. For loan brokers, that specialty can help create clearer marketing, stronger referral relationships, and more relevant conversations with business owners. You do not need to master everything on day one. Start with one customer group, one equipment category, and one consistent outreach process. If you found this helpful, subscribe to Equipment Finance Academy for practical equipment finance training and broker strategies. For more resources on starting and growing an equipment finance brokerage, visit equipmentfinanceacademy.com. Remember, equipment financing is subject to lender requirements and approval. But if you are a loan broker looking for a more focused path to growth, equipment leasing and equipment financing may be worth serious consideration.